I think they are being very complacent, too complacent, but this is only one of the three factors that they are complacent about. They think that the stimulus package would come through, and now it is Friday morning in Asia, Thursday night in the United States, we have nothing. And if you don't get something done tomorrow, Friday, then it's getting too close to elections. They are not going to get anything done in the last few days before November 3rd. That's one major risk. The second one to consider is that you still are having a big expansion in terms of the secondary coronavirus risk in several of the states. For example, Florida has completely opened up with 100% occupancy in restaurants and even bars. Believe it or not, you're going to see a big increase in coronavirus taking place in Florida during the months to come, and that's not factored in. Third, November 3rd, and we had a chaotic presidential debate, and one thing that came out of it was essentially President Trump saying he will not accept the result if it showed that he had lost. So where are the equity investors in terms of discounting for that? So I think a whole lot of negatives are out there, Nancy, and not yet put into stock prices.
How do you price in that election risk in particular, though? Because we've heard from so many market players and strategists who say, look, it was chaotic, but it's just a lot of noise.
It is more than just noise, because you may not be able to say whether it is equivalent to a 15% or a 20% decline, but it certainly does not speak for the S&P 500 and NASDAQ trading where they are. You can differ in terms of a 10% correction versus a 30% correction, but the market currently is behaving as if no correction is necessary on account of the elections. And that is where I think there is a big error that the equity investors are making. The way to do it would be to go defensive, cut back on some of the exposure, and if it turns out to be much worse than expected in terms of uncertainty after November 3rd, then you cut back some more. But November is going to be one very difficult month for equities.
What type of correction, by what magnitude would you expect if we get to election night and there is no clear outcome and we get indications from President Trump that he intends to contest the results?
Since we have moved up a lot, Nancy, I would say the correction would be minimally 20%. I wouldn't be surprised if it is as much as 30%. What you may see is day after day of correction in equities, with the political charges going back and forth and no resolution as to who the next president is going to be. And that's a situation which the market simply cannot take from the largest economy in the world. So the answer to your question, 20 at the low level, 38% at the high level.